Imagine an ambitious person staring down a wall of monitors, drowning in the stress of flickering red and green numbers and endless data streams. Overwhelmed by the noise of the crowd, they frantically search for a holy grail, that one perfect, foolproof system. They chase TV pundits, subscribe to expensive newsletters, and hunt for hot tips, trying desperately to predict what the market will do next. Then comes the breaking point. It's Friday morning, 7:40 a.m. After a grueling, highly unprofitable week, exhaustion sets in. The carefully constructed trading plan they wrote on Monday is tossed completely out the window. Desperation takes over, triggering a dangerous revenge trade. Instead of their usual 10-share limit, they buy 100. It is a massive, highly emotional risk, designed to win back all of the week's losses in a single aggressive move. This chart demonstrates the result. When you trade on raw emotion, the math always catches up with you. The market moves aggressively in the opposite direction, and the account balance plummets. The capital is wiped out in minutes. This level of account destruction is the direct result of a psychological trap, a set of unexamined beliefs and automated responses that veteran trading coach Dr. Van Tharp calls the matrix. Escaping this cycle requires a shift in focus toward Tharp think. The premise is simple, but very difficult to accept. You do not actually trade the market. You only trade your beliefs about the market. This means you have to stop staring at external price charts and start auditing your own internal roadblocks. You must document exactly how you react to uncertainty and stress. This map illustrates your internal belief hierarchy. Notice how conflicting mental parts fight for control over your mouse hand. On one side, your ego demands to be right. On the other, fear of losing capital paralyzes you. These emotional forces block rational execution. Breaking this gridlock requires accepting that the market is just a mirror. If you blame the Federal Reserve or the broker for a loss, you surrender your power to change. By taking total responsibility for every entry and exit, you realize your internal reactions dictate your final results. You have to accept that a financial loss is just a statistical reality of doing business. It is not an insult to your intelligence, nor a reflection of your self-worth. Disconnecting your ego from the outcome is the only way to reprogram your mind. Once you clear out that emotional static, you abandon generic formulas. Instead, you build an objective, mathematical trading system, tailored specifically to fit your unique psychological profile and risk tolerance. This breaks price history into market types: bull, bear, volatile, and quiet. The geometric boxes represent position sizing, dictating risk. In volatile zones, the position shrinks. In quiet zones, it expands. We evaluate this using the System Quality Number, or SQN. By defining exactly how much to risk and adjusting mathematically to the current market condition, the trader stops being an emotional gambler. They become an elite risk manager. Let's look at the trader now. The external environment remains exactly the same screens, the same flashing numbers, but their internal energy has completely shifted. During a highly volatile session where prices are swinging wildly, there is no panic. They operate in a calm, grounded state, totally devoid of anxiety or the internal chatter demanding they make a rash move. Their definition of a trading mistake has been rewritten. A mistake is no longer defined as a trade that loses money. A mistake is simply failing to follow your own established rules. This enables 100% efficiency. It means executing the custom-built system flawlessly, taking the necessary statistical losses without hesitation, and remaining completely detached from the emotional sting of any individual outcome. This psychological weightlessness allows for a highly focused, effortless state of execution. You are no longer trading your fears or past traumas. You are simply observing what is happening right in front of you. This is trading in the now. Financial freedom emerges from this combination of absolute accountability and mathematical risk management. By mastering the internal state, the trader finally steps beyond the matrix.